Hello everyone, welcome to the Alpha Hustle. Here is a weekly analysis of Nifty and Bank Nifty on how market auctioned last week with important references and potential scenarios that may likely to play out in the indices next week. So let's quickly get started. We'll start with the review of monthly charts on Nifty, followed by weekly, daily, and eventually getting down to the market profile charts. Trend on the monthly charts or longer term time frame is still to the upside. One time framing continues where the lows of the previous month are still intact. However, there is a little pause in the month of March, which is trading within the selling tail for the week that was left in the month of February. Some important nuances to watch out for is that the buyers in February failed to get a close above the Jan's high of 14,765. Can the buyers do that this month with just 1 week left for expiry? Big selling tails for the last 3 months suggest that the selling is coming in at the higher prices. Is this the longer term money distributing or just the shorter term time frames selling at the higher prices? Well, we'll review that on the lower time frame charts. There is no change in the longer term trend for now. Trend on the intermediate term time frame or weekly charts is also on the upside. We see that the market is broadly balancing within 14,500 and 15,500 zone. The selling tails back in January had the presence of sellers in the past is now acting as a strong demand zone. Friday's buyers pushed the prices back above these tails. Any breakdown from the last week's low is likely to confirm the change in the structure and the trend for the intermediate term timeframes and may open the lower trading range of 13,500 to 14,500, which is a zone with a strong demand that emerged on the budget day. As long as the market stays above 14,500, balancing action is likely to continue within this trading range. On the daily or short term charts, we are in a balance. We had a nice markup phase, after which the market started to balance since February. Structure and the trend in the very short term is sideways. It's clearly evident that the longer term time frames are either distributing or reaccumulating positions within this zone. We are likely to have another markup phase or a potential markdown phase. However, we need to wait to get that confirmation. As Jim Dalton says, gaps are often caused by emotional buyers and sellers. Such zones tend to get revisited to assess if there is legitimate demand or supply in that zone. We had a gap that was left at 14,400, 14,480 after the budget day, which was revisited on Friday. For now, it confirms that there is demand in this zone that pushed the prices higher with some decent volume expansion. As long as the Friday low holds, we are back into the choppy balance and sideways action is likely to continue. An interesting nuance on Friday is that it looked below the balance and got rejected swiftly. This could be a potential failed auction below the balance that may head for the retest of the balance high at 15,400. Would it be that easy? Well, we'll see that in detail with the market profile charts. So how good was the down move last week? So we had a breakdown from the HVN near the 15,000 and 15,100 zone. However, the down move that we had last week was at the back of longs liquidating their positions as per cumulative open interest, as opposed to shorts driving the market. This could be a potential inventory adjustment of weak longs before the smart money tries to head higher. This scenario may get confirmed only when this HVN is claimed by the buyers again. So this is the HVN we are talking about between 15,000 and 15,150 to 15,200. All the rallies above this zone are being sold into. And we had a clear breakdown yet again for the second time. In all these instances, this HVN between 14,400 and 14,600 is acting as a strong demand. So in the very short term, this zone of 14,400 and 14,600 is likely to act as a strong demand zone, while the zone of 15,000 and 15,200 is likely to act as a strong supply. Now let's look into how market auctioned using the market profile charts. We had a prior balance of 14,850 to 15,320. During the prior week on the 12th of March, buyers had a failed auction. They failed to hold the higher prices that led the liquidation all the way towards the balance low. The mechanical weak hand buyers stepped in towards the balance low to push the prices higher and close back within the balance. However, there was no follow through the buyers on the subsequent day that continued the auction to the downside. Market continued its one time framing to the downside again on the 17th all the way into Friday. The sellers that appeared near the 15,300 zone are some strong hand sellers that drove the market nearly 1,000 points. An interesting action on Friday where market opened towards the low end of Thursday's range. However, sellers failed to get a follow through to the downside. They did try in the A period, fill the gap on the downside that was left after the budget day. However, they failed to get the follow through into the budget day's session that was swiftly rejected by some strong hand buying, starting one time framing to the upside and continuing it throughout the session, closing almost near the high point of the day. On Thursday, market had a double distribution. So we had an upper distribution as well as the lower distribution. The price action on Friday confirmed or has rejected the lower distribution and closed pretty much closer to the upper distribution of Thursday. The zone of 14,800 to 15,050 is going to be an important reference to watch out for next week. So this is a zone where the market spent a lot of time before the buyers gave up to liquidate all the way towards 14,350. Now prices getting back into this zone may face some resistance for the auction to head higher and buyers to head higher. This zone of 14,800 to 15,050 needs to be taken out. Any acceptance above 15,050 and 15,100 may head for the retest of the prior balance high of 15,320 and the failed auction that was left on the 12th of March. Some strong put writing is seen near 14,500, suggesting that these put writers are confident enough that the market is going to expire above 14,500, while the strong call writing is seen near 15,500 and 16,000. So for the expiry next week, 14,500 and 15,500 is likely to be the trading zone. Challenging any of these range extremes would open up a strong trending move. Given that the prices are back into the balance or the balancing action that we've been having for the last couple of months, it has got higher odds for an expiry within this trading range. Again, for Bank Nifty, we'll start with monthly, followed by weekly, daily, and ending with the market profile charts. One time framing to the upside is still intact on the longer term time frame charts with pause as seen in the Nifty in this month. Sellers are strong and active in the zone of 36,000 to 37,000 zone, leaving big selling tails for the wicks. This is the second month in a row where the buyers failed to get a closing above 35,000. Bank Nifty doesn't look so good in comparison with Nifty on the intermediate term time frame. We had a 5-week balance from which the market broke down last week, heading for a retest of prior swing or all-time high of 33,000. If we get continuation to last week's low, we could head for the retest of the demand near the 33,000 zone. For the down move last week, volume expansion is not so great or something that I would have expected for a good breakout. But let's see how the market trades next week. On the daily or the shorter term time frames, clearly there is a change in the context where the market continues to form lower highs and lower lows. Gap that was left on the budget day has been revisited on the Friday, similar to Nifty, after which the buyers pushes the prices back above the 34,000. So the demand still exists near the 33,500 and 33,800 zone. Context in the very short term is to sell into all the rallies. This may change if the buyers could claim the 36,000, 37,000 zone. Unlike Nifty, Bank Nifty's down move is at the back of strong shorts being built up with a breakdown from the HVN at 36,000. This suggests that there were some strong hand sellers at 36,000 that drove the markets down. So this remains to be an important reference to watch out for the future. As we have seen earlier, 36,000 is a HVN from where we had a breakdown, and 32,000 remains to be the next HVN on the downside, which may likely to act as a support. This zone between 32,000 and 34,000 is thinly traded with literally no volume attached. If the market continues to stay below the zone of 35,000 and 36,000 HVN, we may likely to balance within this range of 32,000 and 34,000 and try to build up some volume. In terms of the market profile charts, we have a similar action on Bank Nifty too, as we have seen in Nifty. We had some rejection near the high end of the balance from where market visited the low end of the balance. After a little pause on the 16th of March, one time framing to the downside started yet again on the 17th that continued all the way into Friday. We have a nice bell-shaped balance on Friday where the inventory of longs and shorts is balanced. One important reference to watch out for next week is a rally high on Friday that has been swiftly rejected by the upper distribution from Thursday. So this remains to be an important reference to watch out for. So this balance for 4 trading sessions earlier last week is likely to act as a strong selling zone, and all rallies into this zone may bring in the sellers to mark the prices lower. For buyers to be back in the game and mark the prices higher, they need to take out the zone of 34,600 to 35,600. Any acceptance above 35,600 and 36,000 zone is likely to head for the retest of the balance high. Buyers not getting a follow through to the rally high or on Friday's close, we may probably retest the demand back at the pullback lows near the 33,400, 33,500 zone. And if sellers were to come strong and find acceptance below this zone, we are heading for the retest of prior swing highs or all-time highs at 33,000. Here is a slightly higher time frame market profile charts. We had a big balance or HVN between 34,500 and 37,500 zone. We had a market breakdown below this HVN, and any follow through to last week's action is a confirmed distribution of longer term time frames within this HVN. Or if buyers were to push the prices back into this zone, that may probably confirm that the auction that we had late last week was more of a failed auction on a higher time frame. In Bank Nifty, we see that the call writers are more aggressive when compared to Nifty. However, there is some strong put writing seen near the 33,000 level, whereas the strong call writing is seen 36,000. Bank Nifty may trade within the zone of 33,000 and 36,000 next week. In terms of the position built up by the various market participants, FIs were short earlier last week, which they've covered on Thursday, and interestingly, they turned long on Friday. Same is the case with the pros who were short earlier last week that have been covered on Thursday and then went long on Friday. While the clients are exactly opposite, so this suggests that the FIIs and the pros turned long on Friday, and no follow through to Friday's low could potentially mean that we could have a short term swing low on the charts. That's all for today. Thank you very much for joining and listening. If you find this content useful, please do like, share, and subscribe. Thank you.